we tell you the price at which it was high, we tell you the time at it was high, and we also tell you, okay, what was the amount, okay, at the highest point. And that's a kind of a peak where you can look at and you can quickly analyze, okay, how far, okay, we have come from the peak or from the bottom valley of the market, and from what time to what time. So suppose it's at 12:30 and I saw, okay, that the low was here and the market is still building up open interest. That means money is flowing into this particular call and they are stable to keep things over here, right? So this price, max OI and time, extremely useful. Today, and we're going to be talking about specific use cases of the options market, right? So if VWAP is volume weighted average price, what is VPOC? Now VPOC is simply the volume point of control, or in short, the area where the largest concentration of volume is on a volume profile chart. So there is a distinction we make at VTrender when it comes to volume. 95% of traders, when they look at volume below the price bar. Okay. At VTrender, what we do is we focus on volume right next to the price bar, and we also focus on
Good evening, guys. Good evening, everyone. A quick sound check. I hope I'm coming across. Can I just get a couple of confirmations regarding this sound? Great. So let's get on with today's session. Today's session is on the option chain and how we can make use of the option chain and what all features are available in the option table which we have in the VTrender chart section. All the information you have is in this options table, and today is a typical example of how the option inventory held what was supposed to be a good move in the Nifty futures. And we can see how right from the open the volumes were showing us that the range is been getting contracted in Nifty. I'll show you a quick example of how we could see that. And before that, what we would want to see is in this options table, what all do we get to see? So we have all the strike price. The calls are on the left. The strike price column is in the middle. You have the calls on the left, and then you have the puts on the right. So the data regarding the calls, the open interest, the maximum open interest, change of open interest in the day, the volumes are all on the left side. And along with this, we have the important market profile references of the POC and the VWAP. This tells us if the option is being written or is being uh, a long option case, because if it is below the VWAP and the POC, then that is a good strike to be written, and vice versa. If it is above it, then you have a chance of whatever writing had come in to cover. So, how do we get to see what the volumes were in the option market, and how do we open up these charts? So for today's example, yesterday when we closed, the gamma zero was at 23,000 level. And when we opened in the morning, and this options table, you can see whichever time frame you want. You have a timeline, and you can take it back to the open of the day, and you can see how the volumes were placed at the open. So at the open, our gamma zero was at 23,000, but because of the gap down open, the gamma zero shifted to 22,900. So just as we close the A period, you can see how the volumes were developing. In the options table, you have the highest volume marked in orange. So that those strikes tell you the highest volumes have been attracted there. Today was a settlement day, and on a settlement day, most of the volumes which come in options are writings, which takes place. So what we saw was at the open, after the first 30 minutes, the highest volumes on the call side was at 22,900 call and 23,000 call. And this was understandable because 22,900 was the gamma zero also. So what the option writers were doing were making 22,900 and 23,000 safe. And on the put side, you can see how 22,900, 22,850 and 22,800 had the highest volumes. So at the end of the first 30 minutes, you can see how already the writers are coming in to form a narrow range. So 22,900 and 23,000 on the call side were being written, and 22,850 and 22,800 on the put side. So what next? Then let us go to the B period. Once the B period is over, let us see what happens once the initial balance is done. So here you can see how the call side volumes is now at 22,900 and 22,850, and the put side is at 22,850 and 22,900. So this 22,850 was getting volumes both on the call and the put side, and 22,900 remain our gamma zero level. So if we check the gamma zero at the top, you can see this gamma zero at every time. So 22,900 is what was the gamma zero. So what do you do on a day like this when you know the market is most probably going to be in a range, and the gamma zero is at 22,900? You open up the straddle chart of that particular strike. So how do you open a straddle chart? From this option table, you can get into any chart, any straddle chart, any strangle chart. You can also open individual strikes, and then from there you can see the market profile chart, you can see the line chart, and you can also see individual strike prices order flow chart. So let us start with the straddle chart. So 22,900 we know was the gamma zero, and we had seen equal volumes coming in both on the call writing and put writing. So it was very safe to assume that 22,900 would be the strike to watch, and you could open up a straddle chart of 22,900 and look at taking a short position in this. So how do you do that? In the middle column where you have all the strike, you have two icons against every strike. And another thing which the option table tells you, you have this S symbol next to the strike, and you have the B symbol next to the strike. S is telling you that this straddle is on the downside. That means it is below the VWAP and the POC of that particular straddle. So all these straddles which are showing you a S sign are trading below the VWAP and the POC. So that will attract uh, writing. So how do you select which strike price to go for? the gamma 0 and where the volumes are the highest. So to open up the straddle chart, we just need to go up and click on the icon which says 22900 straddle MP chart, and that straddle MP chart opens up in a new window. So what do you see now? So from the opening A period and B period, we knew that the 22900 is the gamma 0 and that is been written. So you can see how we opened below previous value. That itself was a sign that this straddle can go for more downside. Then we left an initiative selling tail in the in the A period, and then we went on to make a range extension. So once you extend the range, the selling tail becomes your reference for the day. So how you this is the market profile chart. These are based on 30 minutes. You can also, what you can do when you want to short a straddle is you can also have the line chart open. How do you go to the line chart? In this chart, you have icons on the bottom. You have this candle chart. If you click on the candle chart, it will give up the candle chart of the straddle. And let us see how this straddle opened in the morning. Let us go to the opening. So this line chart gives us very important cues, and it tells us that when a straddle is being written and when the open interest is rising and when it is coming down. So you can see at the open itself, we remain below VWAP, and I'll just bring in the OI also, so that this or brown line at the bottom is the open interest of the straddle. This is the opening of the day. So we opened below previous day's low, and the POC was right here at 150. After which we kept trending lower below VWAP. The POC shifted here to the lows of 125, and then we had this swipe above the VWAP in the B period. So when that happened, momentarily we stayed below VWAP, but once we got back below the VWAP and broke this POC of 114, you can see how the open interest kept on climbing. This is the open interest for the straddle. So it is the combination of the call and the put. And this open interest, which was 1.5 lakhs when we opened the day today, went on to make a high of almost 8 lakhs before we saw some profit booking into the close. So you can see how when it started from 150, it continued to probe lower. This swipe above VWAP and the break of this POC of 114 was a fresh shot in this straddle, after which it continued to remain below VWAP all day. The VWAP continued to trend lower. The POC shifted to this 86 level, which became a good trailing stop loss. And then into the afternoon, you can see how the open interest kept rising. The peak open interest in this was 8,21,000, which was at 245, 235. So which went on to probe lower. The POC also kept shifting lower, and the open interest reduction which you see at the close is more profit booking rather than any writing which was forced out. And in this line chart, you can see how the spikes was on the green side all through the day, except for couple of bars in the middle and at the close, which was mostly profit booking. And the POC also shifted right at the bottom to 13, where it closed, because we closed at 22913 spot. So this is how you can make use of this information in the option table, especially on a settlement day when you're seeing volume being built up and at a particular strike price. You can open that particular strike price. In fact, you could have opened even the individual 22,900 strike, the market profile or the candlestick. I'll open the 22,900 candlestick chart, and we can see how the candlestick shows us where the writers were coming in, because we were seeing volumes. So when does the writing happen? We already spoke about it, that when the option is below the VWAP and the POC, it invites writer. You can see how this 22,900 in the opening, it did see some writing, but this got a swipe above the VWAP in the B period, where it saw some OI coming out. But once it made this break below VWAP again after the C side, you can see how the open interest continued to rise and it remained below VWAP. And from a high of 56, it went on to make a low of I think 6 and closed at 13. And the same chart, you can even look at the 22,900 put, which also saw similar kind of writing. So here you can see in the 22,900 put, this was on spike swipe above the VWAP at 945, and you see how the POC is shifted to the top. So this POC shifting to the top is telling you that the highest volumes is here. And how do we get to know that this is a seller? Because immediately after the POC shifting, we have got an IS, and this IS has come right at the VWAP. And once you got this IS, there was no looking back. It remained below VWAP, and you can see how it kept trending lower into the close. In fact, this put closed at 0. So in order flow also, you can get the volumes in options using the order flow, and that is why the VWAP and the POC becomes important in options. We have had a session wherein we have spoken about how the POC of in options plays an important role. Haresh has a question asking about how to judge option volumes are high. So that is why we have two things to see that. First thing is, you see the option table, you see where the highest volume is being attracted. So that itself is telling you this strikes are showing you lot of uh, writing. And how do you know it is writing? Whenever the highest volumes are coming, the latest price will be below this VWAP and the POC. So that is how you make out the volumes. And if you are going short in an individual strike price, what you can do, see, you have this candlestick chart, you can go for the dual window mode, and you can have the same because for individual strike we can also have the order flow chart. So we are seeing how the POC shifted to the top in the 22,900 put, and then we got an IS bar. So the cot also would show you red when it is being written. The OI will keep increasing, the OI will be in green, but the cot will be in red. That will tell you that the option is being written. So what I'm doing now, 22,900 put candlestick chart is on the left, and I'm putting the order flow chart on the right. We'll just go to the opening volumes and we'll see how this put gave this spike higher, swipe higher, 211, and how we got an RS bar here. And the moment we got the RS bar, post the RS bar, we got this IS at VWAP. So this IS, RS plus IS, this is your signal to go short in this. And what will be your stop loss? Your stop loss would be 105, the high of this IS bar. And you go short below 71 with a stop loss of 104, 105, and then you book profit at the first target and hold the rest to uh, with stop loss at VWAP. So you can see how after hitting the first target, we remained below the VWAP, the POC shifted lower, and then we went on to get more IS candles in this put, which was telling us that the uh, put is being written. And the order flow will show you, the order flow will give you the volumes you will, and because volumes are relative, you will not get the same kind of volumes in options on all days. On settlement days, it will definitely have the highest volumes. So here you can see how we had this swipe at 11:45, but it stalled right at this IBL level. And you can see how the sellers are coming back in this. You have a 15,900 seller, 10,000 seller, and just below VWAP, when you are getting this selling happening, you know that the sellers are coming back. And after this, you can see again, it started to probe lower. And where you saw those big reds, that level never came back. So VWAP is the sacrosanct level for option writing. Once we get back above VWAP, then it is a case of being the option writers being on a hot roof. So this is again where it gave us another swipe to VWAP. You can see again here in this swipe how you're getting big reds, 50,000, 20,000, 12,000. You can see the cot is minus 1 lakh, more than 1 lakh red. So these are showing you, these are telling you that this bounce, this rise is being used for writing. And as long as we cannot take out VWAP, you know that we are headed lower. So that is what happened into the close in the afternoon. Again, the POC kept shifting lower in this. You can see that in this candlestick chart. And at no point of time we were able to get above VWAP. And this swipe, this green swipe, these are the swipes which we saw, one at 11:45 and one at 1 o'clock. Both these green swipes were used by the sellers to come back strongly. And you can see how after this 1 o'clock swipe, the open interest in fact started rising even more. So that means the writers were getting more active in this put. So this is how you can make use of the dual window mode. You can watch the candlestick, you can watch the order flow, which will give you what is happening in that particular option, strike price, and what will be the references. Whenever we are coming near VWAP, if you are an option writer, you will definitely want to look at re-entering in that option. And you can see how if I if we switch on to this, you also have the time frame to select. You have the 1 minute, 3 minute, 5 minute, 15 and 30 minutes. So if you see the 30-minute order flow chart of this put, very clearly it is telling you how from the morning the OI has been increasing 80,000 plus. This is a minor 12,000 which happened because of that swipe above VWAP. Then 46,000 plus, 42,000 plus, 42,000 plus. Whatever was coming out was minor. And you can see the cot was completely red all through. And this is that big 2 lakh red which happened after we swiped near that VWAP. So here you can see how the cot is, the DOI is green. That means the open interest is increasing. The cot is red. That means it is writing which is happening. And the same thing you can see in the candlestick with this green OI spikes. That is telling you that the open interest is rising. And because we are below VWAP, we have got only IS bars. We have not got a single IB bar in this put today. So you've got one IS at 951 and you got the second IS at 11 o'clock. And both these IS highs were not taken out. And these two green bars which we had both came just below VWAP, and both of them saw big reds coming in. So this is how you uh, watch. You can make use of the candlestick, you can make use of the order flow, you can select which time frame you want to go in for, 5 minutes, 15 minutes, 30 minutes, 3 minutes and 1 minute, and then you can know what is happening on the bigger time frame also. So here when you're looking at the 30 minutes, you know you can trail your stop loss if you're short in this option to the previous 30-minute reference. For example, you had a 30 the IS 30 and the high was at 60.9. So once you close this 1045 bar, you can trail your stop loss to this and you can hold on till the close. So that is how you can make use of this data. Coming back to the options table, so we have seen how we can open up the straddle chart and how you can see the line chart of the straddle. You can see how the volumes have been increasing. If I take you to the close of the day today, you can see how the maximum volumes came in this 22,900 and 22,950 on the call side. It was almost 3 crore volumes, and uh, open interest was also added highest in this naturally. Same thing on the put side, you can see almost similar volumes of 3 crores in 22,900 and 22,850. So when equal amount of volumes are being added both on the call and put, you can expect a day which is going to be a balance and which is going to close around the gamma zero level. So that is how we saw it started with 22,900 being the gamma zero. Highest volumes continued to come at 22,900, and at the close it validated. The highest volumes came both in the 22,900 call as well as a put, and we closed almost at the 22,900 level I think 13 points away we had a close. But the way the volumes were building, the open interest were building, even in the VMR, we are thinking that it is going to close at 0. So this is how you know how you can open up a straddle chart. We can also do the same on a strangle. For example, you are in the D period and you see 20, you are a more conservative player and you want to be safe, very safe, risk wise, and you see the highest volume which is coming in 22,800 put, and call side highest volumes is at 22,900, but you want to be safer, so you want to short the 23,000 call. So how do you open the strangle? Strangle, you need to select, you have these radio buttons next to the strikes. For the call, I'm selecting the left side 22,300, the call is selected, and on the put I'm selecting this 22,800 put. So I have selected a pair, and once I select a pair, I will get the pair details of the pair at the bottom. Selected option pair is 22,800 put and 23,000 call. So I just need to click on this link, or I need to click on this open chart, and it opens up the strangle chart for me. So this will open up by default the market profile chart. We can always go get into the line chart. So the same thing as we saw in the 22,900 straddle, same thing is in this strangle also. You've seen an initiative selling tail. We are below previous value and we have made a range extension. So if you want to have a clearer view, we open up the line chart of this strangle and we'll go to the open and see where it went, saw the selling coming in. So here you can see this is the open of the day. We opened, we remained below VWAP. The POC was here. We broke below this POC. It saw some good writing. The open interest was rising. You are seeing green OIs. This is the strangle chart. And then we did see the POC shift to the bottom. So once you are short in a strangle and the POC is shifting, it definitely calls for profit booking. You take money off at least 50% or 75% in your trade because it has given you a good move, and then you trail rest to cost. So what happened after this POC shifting lower? One of the leg gave a swipe, and you can see how this strangle went on to get back above VWAP, and this led to some more squeeze, and we went on to tag this POC of 170, which was previous day's POC, and from there in the afternoon we sorry this is yesterday's, sorry, today we did not go back. Oh, I think today's data is not updated in this. So, but anyways, in the market profile chart, we can see how we remained below that one previous day's value and VWAP. Yeah, this what we saw in the line chart was this C side which happened yesterday, and you can see how even yesterday this strangle was a good shot because we made that swipe higher, and once we broke the VWAP and the POC of yesterday, this strangle from this 170 has been probing lower. And today again, after this initiative selling tail, at in the D period, if you want to go short in this strangle, your stop loss would be this uh, selling tail of the morning. And yes, this is definitely not going to give you much points, but this is relatively a lower risk because it has got more probability of closing at 0, because these are out of money options, and out of money options on an expiry day will keep losing premium even if the market is not uh, moving out of that range. So this is the same thing happened here. You went on to get 0 in this strangle. So this is how you can open up the strangle chart using the options table. So Harish has another question. He wants to know other day except expiry day. This option table we look at every day. expiry day, definitely the volumes will be the highest, and you will also see volumes coming in the in between strikes of 22 850, 22 950, which does not happen on other days. But on other days also there is some amount of writing which is happening. So when whether it is an expiry day or not, we always follow where the gamma zero is. We always see where the highest volumes is in the option table, and then accordingly look to take trades in that option. So we have been having a balance. So when you have a balance, you know the stage is more set for option writers, but does not mean blindly you can write options anywhere. You will need to know the levels, you will need to know the strike which has to be written, and that you will get to know only better when you see this option table, when you see where the volumes are building up, and in that strike price you see where the VWAP and the POC is, and vice versa if you're looking for a dukan trade, because when the writing is happening and the option gets above the VWAP, there is a very good chance of it giving a run to the writers. So So another thing what we can watch in the option. So we had the gamma reference the 22,700, the gamma lower range. So I'll just open up the 22,700 market profile chart of the. So what we can do, we can see what is happening in this profile in this 22,700 call is that we are forming overlapping value. That means we are forming a balance. That is the reason we are forming overlapping value, and the POC is slowly shifting lower. So that this itself, the option call option chart itself is showing us that the upside is not great, because the value and the POC are shifting, are overlapping, and the POC shifted lower for the last 4 days. So here what we can do when you are getting such kind of volumes, even in the option chart, you can look it on the higher time frame. You can go for the weekly profile. You have the calendar week profile. You can click on this. You get the weekly profile. In the weekly profile, you will get the important references of where you can look at going short in the option. So you can see how beautifully this week's profile is formed a Gaussian curve. And when you're getting a balance, that means the market is not trending. So that is the reason you can take references of the higher time frame. For example, this VWAP would be your reference, and if you are going short in this call, this VWAP would be your stop loss. And accordingly, today what we did was we opened below this POC, we remain below this POC. So if you were looking at a trending move higher on the call side, it needed to get above this 231. And if it would have got above this 231 and you see order flow showing you greens, you can look for an objective of this 270 and then this value area high. So what we do in market profile, the concepts apply on all instruments. So you can do the same on the weekly chart of options. You can also have the daily chart. You can split the daily chart to see what is happening on every 30-minute TPO. So you have this. So what this call showed us yesterday was we did a typical seaside, and in the seaside we got a selling tail. After that, this call was being written. So you can also get that confirmation by using the order flow chart of the same chart. I'll open up the 30-minute order flow. I'm just showing you how you can use the data which is available in the option table, and for both buying as well as shorting options. Because when you're forming a composite, so what do? We can form same thing which we saw on weekly. We can make a composite, because all these 3 days are having overlapping value. So we select these 3 profiles and merge them, and we get the value area high and the value area low. So when you want to go long in an option, you want that option to show you buy side volumes and not happening. If it is, you can see how we have this selling tail here 384, and we got a And if we open up yesterday's order flow chart of this same option, we'll go on to the 30-minute order flow so that we can see in relation to what is happening on the market profile chart, what the order flow showed us yesterday. I'll go to yesterday's open. And I'll just increase the PPR size. And you can see how this call in the B gave a 30-minute IB30. And once we made the C side, we got uh, sellers coming in here, and we immediately rejected, leaving this selling tail. So here, what is happening on the market profile, you can also see what is happening in the order flow. And here, this IB30 got triggered, but here you are seeing RS forming, and the C side is something which we do not trust, where this is stalling right at this selling tail. So what we did here, we left an RS, we got back to VWAP, we took support above this IB30 high, but in this IB30 low, sorry, and but in this bounce back, we were not able to take off this selling tail. The G made a high right where the D was, and we left an RS. And when you're leaving an RS, and then you get this IS30, which is negated the previous IB30, this is your signal to go short in this call. And what it has done, it has also got back into previous value. You can see how this 30 IS30 high is right at this value area high. And once you are getting back into this, this is telling you, it is giving you the 80% rule in this value. Nice composite. So we got this 30 IS, and this 290 was our reference. We remained below that. And today, because we opened lower, this in fact went on to make a low of 140, and in the probe higher we were not able to take out yesterday's POC of 224. This was the high we made, and today we got selling happening over there. In fact, we were looking at this level of 224. If we had got some 3-minute IB bar over here, we could have looked for a probe higher back to this VWAP of 273, but that was not the case. You can see how on the 30 minutes, 1 2 3 4 times we tried to take off that 230 220 230 level, but we are not able to do that, and we remained in this range and closed right at this HVN of 213. So this is how you can make use of the market profile. You can make composites in the market profile, make note of the value, and then look at what is happening on the order flow, whichever time frame is suiting your trading temperament, and accordingly look to take trades on that time frame. So this was what was for the profile and the order flow chart. Virat has a question about opening strangle charts of Nifty. The strangle chart opens up from the option table, but we cannot have deep out of the money option chart options in the option table. We only have the option in the money and little out of the money. So you, if you are looking at a strangle which is out of this option table, you can open a strangle chart by doing a bit small tweak in the URL. So let me see the straddle chart which we are seeing. So here you can see the symbol. So for example, you want to open next week's '22 300 put and '23 600 call of next week. You can open up any strangle chart, and you can just select this, change the URL, and so this is how you can open any strangle chart you want. This is the 22,300 put and 23,600 call of next week. So this is how you can open up any strangle chart you want if the strikes are not available in the option table. Option table has got strikes only limited to where the volumes are more highest. For lower volumes, these out of the money will not have the volume, so there is no point in having them in the option table. But you can still open up the market profile chart on the using the URL. Hope this will be helpful. Whichever strangle you want to open, you can just edit this URL, change the symbol, and that will open up for you. So that is it for today from my side, guys. Hope it was a useful session for you to make sense of how to use this option table, and a quick example of how 49,000 put, which was the PE wall in Bank Nifty, saw some huge writing coming in after the gap down open yesterday. So yesterday you can see 19th we made these highs, but immediately we came back below VWAP, and you can see how this 49 put was being written. We remained below VWAP. We got IS. Oh, you can see OI being on the green side, and we remained below VWAP all day. So this is a classic case of the gap giving you a good uh, opportunity to get into writing. And especially when we are in a longer time frame balance, you know that whenever the market is opening away from the balance, it will get back to that balance. So all the more reason for this to play this mean revert. So 49,000 will remain an important reference because that is the gamma zero, and we are entering into the final expiry week. Volumes also can expect to be higher in Bank Nifty options for this coming week from tomorrow. And just like how we get good volumes in the Nifty options, Bank Nifty also could be a good play for the rest of the 5 sessions which remain in this month. So that is it for today from my side, guys. Thanks for joining in. And if you have any queries, please let us know. You can mail us at support@retrender.com. You can also DM me on Twitter or X. My ID is open at Uttam Goel. There was a question from Amol. Amol, you can DM me on X at Uttam Goel is my ID. And we'll be definitely willing to share whatever information we can. So thank you, guys, and signing off for now. Have a great evening, and let's look forward for a good Friday tomorrow, especially after the range bound day today. We can expect some good moves tomorrow.